Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 30th of November. So as we enter another week, we're shortly going to be entering another month and the end or the last month in the current year. So some people may well cheer for that. But again, from the markets perspective, typically December is quite a positive month, and we've got end of month rotations coming into play over the next sort of couple of days, and certainly the early part of this week. On top of that, this week again is another important week for Brexit trade negotiations. Again, they're getting pushed down to the wire at the moment, and that is likely to be the source of any kind of sort of volatility involving euro and pound in either direction, depending upon how they play out. So quite an interesting week. Just to remind you that on Wednesday we're going to be doing a live stream at 9 o'clock UK time. The link to the session and to register or to set yourself a reminder for the session is placed underneath this sort of video. But we'll be taking a look at these markets, how they're sort of played out, and some of the opportunities that we're going to be looking at going into the second half of the week. So let's have a look at how things are setting up at the beginning of the week here today. So if we come across to the Dow first of all, again these US stock indices are looking extremely strong. We've had a number of tests up here to 30. More recently the market now has sort of hit 30 again here for about the third time and started to see some weakness coming in. Overall I think there's these markets are going to be sort of sitting on a sort of cusp of where do we see advancement and rallies past 30 into going into the new year and beyond, or do we just see a realization of the COVID damage that this has done to the economies, and we see that these markets take a step back. Now from a higher time frame perspective, clearly these markets are looking a little bit on the stretch side, and there certainly is room for a step back in these markets. As lower the time frames we come, we can also start to see rejections of the highs and start to see some evidence here of turning points. As I've said, it's a number of sort of analysis are sitting on either side of the fence here as to whether we see continued strength with arguments of stockpiles or cash piles and end of year, all sorts of things like this that are supporting the market higher. Then you've got the other side where you've got the COVID damage to companies and economies starting to be a realization on the impact of these valuation levels. So the way that we're looking at this is very much going to be on the sort of technical structure of these markets and looking at trading the windows of opportunity when the trends support. So at the moment here you can see that the Dow is supportive or has found resistance here at that 30,000 level, and we're starting to see a bit of a sell-off at the moment. Now even having said that, the trend here is still intact to the long side at the moment, and it would take a break underneath 29,150, which was the previous all-time high before we started to get up to these 30 levels, for the market to really sort of put in a lower high within the technical structure of the trend. Having said that, the indicators here are starting to look a little bit weaker. So if we come down to the 4-hour time frame, you can see that we've got a level in here around 29,600, and this level has been sort of fairly sort of significant through the recent price action. I think even now we might start to sort of modify that to 29,500 to 29,600. You can see that that takes in these lows here, but even so, even taking that into account, the trend structure is more to the short side here, having put in a lower high and a lower low. So I think here the way that we're going to be looking at the markets is if we get lower, these lows taken out around 29 sort of 500, then we'll look for 29,150 for the next support level. At the moment market is sort of finding a bit of support here. Look for resistance around that 30,000 sort of price point. So very much sort of we've got some fairly decent size sort of trading windows in either direction, and it's very much going to be an intraday playing these markets. Now, if we come and have a look at precious metals, we've seen these sell off sort of fairly hard, and again, this is on the back of the development of vaccines as the risk on sentiment is starting to come into the markets, and these typical safe havens are being sort of liquidated. So at the moment here with gold, we've got a trading window here with the market sort of in between at the moment from 1800 down to that sort of 1750 level, and I think if I zoom out of this you can see 1750 through here is that sort of next structure point in price action, and quite a significant structure point as well. Now, even more so than gold is silver, and silver looking a little bit more interesting to me, because if we have a look at the daily time frame, we can see that there's not a great deal of support where the market is. In fact, price is just, I think we can sort of start to look at this 22 level here. The market tested it once before when we had the sell-off before. The market's had a slight bounce off there at the moment, but if we can get some again selling underneath 22, well then the next sort of trading window brings us all the way down to 20 sort of 19,200. That's a fairly size sort of air pocket there to the short side, so we're liking those markets to the short side in the near term. Coming over to the currency markets, dollar weakness seems to be a theme at the moment, and Kiwi strength has always also been a theme for the past few weeks. So markets like Kiwi dollar, we've got some lovely trends forming here on these higher time frames, particularly looking at the 4-hour time frame and the 8-hour time frame, and looking for buy pullbacks into sort of buying opportunities. The same here with Kiwi CAD as well. Nice strong trends and nice structure on these mid time frames. So as long as we've got those structures in place and gain new entry opportunities forming, we'll be looking at trading these trends until they end. So there's a few markets there that we're keeping a close eye on going into the beginning of this week. Don't forget to join us on Wednesdays sort of live stream, and if you do want to get notified straight into your email inbox of the events that we run, then make sure you sign up to our newsletter, which you can do that on our website at smackthemarkets.com. Hope it helps, and look forward to speaking to you next time. Bye for now.